Well, hey there, everyone. Happy Wednesday. Welcome to our weekly live. Normally we do these on Tuesdays, but here today on Wednesday because I was feeling a little under the weather yesterday, and that's actually why I'm not on camera today. So I'm going to save you all the the pain of seeing me when I'm sick. But let me know if you can hear me in the comments. That would be greatly appreciated. Just want to make sure that everything sounds and looks good. And we are going to go ahead and get started. And as y'all have questions, definitely post them in the comments. I will get to those very, very gladly. And if you are watching us here live, go ahead and say hi in the comments so we can know that you're here. Okay, so we're going to get started with today's live. And today I thought I would do something a little bit different than what we normally do. And I would actually take you behind the scenes and show you what my money meetings look like. So my money meetings are meetings that I have twice a month. Oh, perfect. You can hear me. Great. Thank you so much for that. So my money meetings are meetings I have twice a month. And I generally do these on the 5th and the 20th. So basically I like to do them about 5 days after the middle of the month and after the end of the month. Now, I adjust those days depending on when the 15th and when the end of the month actually falls. I typically like to do my money meetings on a Thursday, so I'll tend to do it on the Thursday after the middle and the end. But you can come up with your own schedule. I think the point really is to just pick a time that makes sense for you. And I like doing it twice a month. I think that feels like I'm checking in enough, but not too much. And I especially like doing it right after the middle of the month so that I have plenty of time to course correct or make any adjustments for the remaining part of the month. And then I like doing it at the end of the month so that I can see how the month went and make any adjustments for the new month. So, all right, let's go ahead and dive in here. I want to show you what it is that I actually do when I do my money meetings. Now, first things first is I prepare for my meetings. So I actually have my money meetings set up as recurring calendar invites. These are on my calendar. They never get changed. I really try very hard not to adjust these times, not to move them, because I want them to truly be treated as the priority event that they are. And so I'm pretty firm about leaving them at the exact time. I worked really hard to find a time that worked for me, a time where my head was really in it, where I wasn't going to be distracted or bothered by anyone. And so I've now set it up as a recurring calendar invite. And I actually have them set up for the entire year so that that time is marked on my calendar. No one can book anything over that. Excuse me. I also spent a bit of time creating my space for these. So I knew that even for someone like me who likes talking about the numbers, I knew that my money meetings were sometimes going to feel stressful and, were not always going to be the thing that I wanted to do. And so I wanted to make sure that my space was somewhere where I felt really comfortable and that I looked forward to actually going to and to doing these meetings. So a few things that I do, for example, I do them at my desk, but I just put a few things that I really like to look at. I put a picture of my family and I put some, sort of inspirational cards that I like to look at. It sounds silly, but just having those things there, giving me something that I can look at when I'm doing my money meetings to remind myself why I'm doing this, why I have my business, to keep, keep me inspired really helps. And then the other thing I do to prepare for my meeting is I pull all the reports and relevant information that I need. And we're going to talk about, we're going to talk about those in a second. But generally speaking, the reports that I want, I pull my profit and loss statement, otherwise known as an income statement. This is shows me my revenues, my expenses, and my profits. I also will pull my bank statements or credit card statements, anything like that. I'll pull all of that up. And this is actually a great thing as well that you can have your VA do. If you have a VA or if you have a bookkeeper, is you can say like, hey, I'm going to do my money meetings on these days. Please make sure that this information is pulled the day before and put it in a place so that you already have it. And you can just, as soon as you start your meeting, you can get there and just kick it off right away. And that's one thing I actually want to point out is I don't wait until my money meeting to pull these reports because I don't want to start off my meeting trying to like fuss around with tech stuff or trying to pull reports or trying to log in to places. When I start my money meeting, I have these reports ready. I keep them in a Google Doc folder. They are there for me when I sit down for that meeting. So typically when I was pulling these reports for myself, I'm not pulling them for myself anymore, but when I would basically just schedule a little bit of time the day before, like 15 minutes max, just before I went home to just pull the reports, put them in that folder and make sure they were there ready for me. so I could kick my meeting off right. Okay, so that's how I prep for my meeting. Now, once I'm actually in my meeting, the first thing I do, and even now I've been doing these for several years, I still do this. The first thing I do is I remind myself what my goals are for the meeting. And typically, I like to say there are three goals with any money meeting. The first is to identify and solve problems. So this could be something as simple as an expense that was categorized incorrectly, or it could be something bigger like a client that hasn't paid their bill, or I think that's probably a good example. So things like that. Like goal number one is just quick and dirty. Like, how can I make sure my numbers are right? How can I make sure everything looks good? Now, if you have a bookkeeper, they're probably going to do this for you. So if you have somebody who is regularly in your accounting records, you may not need to really focus on goal number one. You may just do sort of a quick glance, make sure everything looks good, and that may be less of your process than it will be for others. But if you don't have a bookkeeper, then this is the first thing I like to do is just make sure all my numbers look good. Now, the second thing I like to do in my money meetings is to identify opportunities. And these can be opportunities to either save money or opportunities to make more money. And we're going to dive in and talk about what those look like. And then the last thing I like to do is actually equip myself with the information that I need to make better business decisions. Now, sometimes this information is going to be in the sense of these are my most profitable revenue streams, so I'm going to focus on those. Other times it's going to be here's what my cash flow looks like. So if I want to make a spur of the moment purchase, I know whether or not I can do that. So it's just making sure I have the information I need so that when I'm out there running my business, I don't constantly have to be going back to my numbers to look something up and figure something out. I've already got that knowledge in my mind. All right, cool. So we're going to go on to the next slide. And again, if you all have any questions or comments, feel free to drop them in. I'm happy to address questions as we go. So once I've outlined my goals for the meeting, the first thing I do is I look at my income statement, or again, this could be called your profit and loss statement. This is a report that I pull from my accounting records. Pretty much every accounting system out there should have this report. They might call it something different, but this is what they'll have. And again, it shows your revenues and it shows your expenses and it shows your net profit. Now, I always want to pull the version that lets me see my expenses and my revenues by categories. So, and I'm going to show you an example in a second, but sometimes in your accounting system, it'll just have like a very high level total revenues, total expenses. That's not the one I want. I want the one that's going to say you spent X on marketing and Y on office supplies and so on and so on. The other thing I also want to mention at this point is when it comes to revenues, I know a lot of y'all, and this is totally fine because this is what most people do, but I know a lot of y'all just kind of group all of your revenues into one revenue category. If you have multiple offers or products or services, I would highly recommend having multiple revenue categories within your accounting system so that, and so when those transactions come in, actually putting them into the respective categories. Now, sometimes this does take a little bit of work. So for example, I have a course and I have a membership. When people sign up for the course or the membership, that happens through Stripe. So when I get money into my bank account, Stripe doesn't say, hey, you got this much for your course and this much for your membership. So we actually have to go in to our Stripe account, look to see how much was for the course, how much was for the membership. And then within our accounting system, let's just say it pulls the whole transaction in for $1,000. We then go into the accounting system and we actually split that transaction and say 600 was for the membership and 400 was for the course or whatever it may be. And that way we can track the different revenue streams. Yes, it takes a little bit of extra work, but I highly recommend it because it's going to allow you to really see, and not just see, but to measure the profitability and the kind of long-term growth of your different revenue streams. And that's going to be really important information as you grow your business. So if you have any questions specifically on how to do that, feel free to drop them in the comments. And I'm happy to follow up with you because I know sometimes that can feel really confusing, but it's actually a pretty simple thing to set up. And so I'm happy to walk you through that. Okay, so when I'm looking at my income statement, and I'm going to pull over, actually, you know what? I'm going to talk about it first and then pull over because I've got to share my screen, share a different screen to show you. But so in looking at my income statement, the first thing that I want to look at is my budget to actual. So What this is, when I say budget to actual, is I have a document, an Excel spreadsheet, where I have laid out my budget for every single month. And I've budgeted what I want my revenues to be, and I've budgeted what I think my expenses are going to be, and then subsequently my profits. Now, when I do my money meetings, what I do is I take my actual numbers for the month or the half a month, if it's the middle of the month, and I put them into that budget spreadsheet. And then I compare my actual numbers to my budget numbers. Now, when I'm doing the first money meeting of the month, which is the one that happens right after the first half of the month, what I'm looking at this point is, am I on track? So for example, if I budgeted that I was going to make $10,000 in revenues this month, by the middle of the month, I would expect to have already made 5 if I thought my income was going to come in consistently throughout the month. Same thing with expenses. Facebook ads, I've budgeted to spend $1,000 this month. By the middle of the month, I would, hopefully have only spent 500 of that 1,000. Again, assuming the expense gets spent consistently throughout the month. And so what I'm going to do when I'm looking at that budget to actual is I'm going to say, am I on track? Am I behind? Or am I actually doing better than I thought I was going to do? And if I'm behind, what can I do to make sure that I catch up to my budget by the end of the month? So if I'm lagging on revenues, for example, can I do another promo? Can I send another email? Can I, whatever it may be, can I reach out to another prospective client? And so knowing that in the middle of the month is really helpful because it still gives me 2 to 3 weeks to correct for it and pivot, right? So that's the first thing I do is my budget to actual. Now, the other thing I also do, let's just say like 2020, right? COVID threw a wrench in a lot of people's plans. So let's just say you were in a situation like many people were in 2020, where you sit down to look at your budget to actual and you realize pretty quickly, excuse me, you realize pretty quickly that your budget probably not realistic anymore. Maybe it's because of something really big like COVID and it's long term, or maybe it's something more immediate like you got sick and had to take a month off, or something happened with family, and whatever it may be. But it's you realize that, hey, something has happened and we're really not going to hit our budget. This is a great time to actually do some retooling of the budget for the rest of the year. So if I get the sense that, hey, this thing has happened and I don't think that my original budget was so realistic, this is also a time where I will start to revisit the budget for the rest of the year, or sometimes even for the quarter. Maybe I won't look at the whole year, depending on the severity and the longevity of whatever the situation is. But I'll look at those numbers and say, what do I need to move around? And this could be, again, both revenues or expenses. So maybe can I cut some expenses? For example, I know a lot of people last year who had physical spaces said, let me get rid of that physical space if I can, because I just don't think that that's going to be a good use of my money, given the pandemic. So I look at things like that. Now, the other thing I do when I'm looking at my income statement review is I look at my actual month's results to the prior month. So we're in January of 2021 when I'm doing this. So I'm going to compare January to December. I just want to see, generally speaking, I want to see some growth month over month. Now, I want to say this isn't always going to happen, right? Depending on your business might be somewhat seasonal. So for example, if December is a really big month for you, January might be pretty quiet. Maybe that's the month where you kind of dial things back and you focus more on strategy and admin type stuff as you ramp up for your next promotion. That's okay. You know that about your business. But if that's not the case for you, if generally your business is fairly consistent every month, then you want to see growth month over month. So I'm going to look at January versus December and say, what happened with my revenues month over month? What happened with my expenses? Where am I at? And I'm going to do the same thing for this month to the same month last year. So if you are one of those people who has more of a seasonal business, comparing January to December, probably not that helpful. That's why you want to compare January of this year to January of last year and say, okay, how does this month compare to what I did a year ago? And again, the idea is that you want to see growth over time. Now, if your business is newer, or if you totally changed up your business offerings or whatever, as is the case with me, and I'll show you this in my example, then you may even find that comparing the actual month to the prior month the same month in the prior year may not be as helpful at this point, but over time it will become helpful as you grow out your business. So, okay, I want to go ahead and I want to just share with you all. Give me 1 second here. Hold on. Let's figure out. I got to figure out how to do this. Give me 1 second. Do. Okay. Hopefully y'all can still hear me, and I've now shared my screen. I want to make this a little bigger if I can, but this is an example of my profit and loss statement. Now, one thing I want to mention, let me just see if I can get rid of some toolbars here. Get rid of that. Excuse me. One thing I want to mention is when you download your reports from your accounting system, they're all going to look potentially very different, okay? Now, my report doesn't download like this. When my report downloads, all that I see, and this actually, by the way, came out of my accounting system. That's why you see all this up here. But when I download my report, it's just going to have these 2 columns. So it's just going to have the account and then the numbers for that month. What I then do is in my accounting system, so I did this for December 2020. In my accounting system, I then go back in and I pull a report for the prior month, and I pull a report for the same month the prior year. And so then I just copy and paste in the amounts here into the same spreadsheet so that I can compare all 3, because I like to compare them like this. You can also compare them on multiple screens, whatever is easier for you. But I just want to point that out, that not very many accounting systems that I know of will give you a report that is exactly like this, that you might have to paste it together a little bit. But this is my report for December 2020. So you'll notice up here, I've got all my income accounts, and notice I've got them separated by the different types. So membership, courses, tax prep, coaching, guest teaching, blog posts, affiliate income. I don't have cost of goods sold in my business, so I don't have a number there, but here's my gross profit. Then I've got all of my operating expenses, and you can see I've got them broken out into categories here. And then I get down to my profit. Now, I've added down here, and we'll talk about this in a second, but I've added down here my owner's pay and my tax savings. So this is what I paid myself, and this is what I set aside for taxes. This doesn't get shown on my profit and loss statement because these are not revenue or expense items. They don't get factored into the calculation of my profit. These are cash flow items, meaning once all my money comes in and I've paid all my expenses, I'm going to take some money out of my account to pay myself, and I'm going to take some money out of my account to set aside for my tax savings. Okay. So once I'm in here, like I said, you know what? I can't show you my slides right now, but the 3 things that I do, the first thing I do is compare my budget to actual. Now, I don't have my budget up here on a screen. I didn't pull that one up to show you all, but basically I would look and say, okay, how do these revenue amounts compare to what I budgeted? And then similarly, how do these expense amounts compare to what I budgeted? Now, this is the money meeting that I would do at the end of the month because I'm looking at a full month. So in this case, I'm not asking these questions to figure out how I can pivot to hit my goals for the month. I'm asking these questions to figure out what changes do I need to make in upcoming months so that if I was behind on my goals in December, I'm not going to be in January, February, March, etc. Now, the second thing, like I said, is to compare this month, December 2020, to the prior month, November 2020. It's a little bit of a deceiving comparison for me because I did a major promo in December. I did my tax prep promo. That wasn't something I was doing in November. So obviously you can see I have 0 revenue there, but that's not surprising. I didn't have a promo for that. So sometimes what I'll do is I'll add a column and I will just do a little, actually, I should have done the autofill. That's okay. And just use that to compare. So, you know, my membership went up a little bit. I wasn't really promoting it, so that doesn't surprise me. That I'm fine with that. My course sales actually went down. Also doesn't surprise me though, because I was not promoting my course in December. I was focusing on my tax prep. So even though that number went down, I'm not that concerned because it wasn't a focus of mine in December. Obviously, my tax prep number is huge. Again, I wasn't doing the promo for that in November. I don't do coaching anymore, so that's not an issue. My guest teaching and blog posts went up. I typically, December is a good month where I don't write a lot, but I write for a couple of people and I'll follow up and say, hey, do you want to do an end of the year financial blog post? So that's why that number went up. And then I actually didn't have any affiliate income in December. I only work with 1 or 2 affiliates, and I didn't really do any promotion for that. So all of those seem okay to me. None of those stand out and concern me. And so I feel pretty good about that. But as you're going through that process, if anything concerns you, then you would highlight it. So that's that comparison. And then I can do the same for December of, there we go, that's what I want to do. The same for December of the prior year. Now, I mentioned a few minutes ago, December of 2019, very different business than I have now. I wasn't offering tax prep. I was doing coaching. I didn't have a membership. I had a course, but it was like fairly new. I hadn't put it on Evergreen yet. So I had a very different business. So as I'm going through this, I'm looking for growth, certainly, but I'm also, it's not as good of a comparison for me at the point I'm at in my business because I'm not comparing apples to apples. So of course, my membership revenues went up year over year because I didn't have a membership. However, I'm really pleased to see my course sales went up, right? December of 2019, $673. December of 2020, $34.79. So really happy to see that increase. Obviously wasn't doing tax prep. Am not doing coaching anymore, so that's why there's a difference there. I wasn't doing any guest teaching or blogs at the time, and I wasn't doing any affiliate income either. So, again, none of that surprises me, and I'm just really glad to see that year over year, my revenues have really increased. So I'm going to do the same thing for my expenses. Excuse me. And I'm not going to go through each item on this, but really what I'm looking for here is, does anything stand out for me? So, for example, let me pull this down just so we can see the differences. So I'm going to kind of go through and say, okay, like, all right, contractors, I spent $250 more in December than November. I pay my VA a bonus, so that didn't surprise me. These are all pretty small numbers. I'm not really going to stress about that. Ooh, I had a $500 increase here, $500 in taxes and compliance fees in December over November. Well, that's when I renewed my LLC, so which is an annual expense. That makes sense. Technology went up quite a bit. So this might be something that I would look at and say, why did my technology bill go up $240? And I would pull that account in my accounting and look at the individual items that got charged to that account and say, okay, why did that go up? Can I cut back anywhere? And so these are the types of things that I'm looking for. And then again, I'm going to do the same thing for comparing December 2020 to December 2019. Now, again, my business has changed quite a bit in that year. So I would expect that there would be a lot of differences there. And I'm not going to dwell too much on them, but it's still good to do that comparison to see. Okay, so now I want to go to, bear with me one second. Switching between the screens is not the easiest thing in the world. Oh. Okay. All right, we're back to this. So that's everything I like to do for my income statement review. And as sort of a summary, the biggest thing that I want to focus on with the income statement review is, am I on track to hit my goals? And so am I on track to hit my goals? Is my business growing? And where do I need to pivot or make adjustments to either save money or make more money? Okay, so that's what I'm focused on when I'm looking at my income statement. Now, the next thing I do in my money meeting is I look at my balance sheet and my cash flow. Now, for most of us, we're on what's called the cash basis of accounting, which means that we record money as we receive it, and we record expenses as we pay them out. So because of that, we don't have what's called a balance sheet. A balance sheet is typically a report in your accounting system, and it's a set of accounts where you basically track the debts you owe and the assets that you have. So for most of us, if we're on the cash method of accounting, we don't have a balance sheet because we're not tracking debts and assets, but we do have bank statements, and we have cash flow, and we have possibly credit card statements and whatnot. So those are the things I'm going to be looking at here. So, and actually I'm going to talk about the three, and then I'm going to show you an example. So the first thing I look at is my cash flow. And I like to actually track my cash flow on a rolling 3 months. So we're in January. I'm going to be looking at January, February, March. So when I sit down to do my money meeting on January 20th, I will add April's month to my cash flow tracker. So at some points I actually have 3.5 months, but I basically want to always have at least three full months on my cash flow tracker. And I'll show you all of this in a second when I pull up my cash flow tracker. I also want to look at my other assets. Now, again, for accounting purposes, we don't track these, but I want to know, do I have bills from clients that they haven't paid yet? So do I have money that's coming in? Do I have inventory? If I'm a product-based business, do I have inventory that I can sell? Do I have investments in my business? Do I have a savings account for my business? What are my assets? And again, are those growing? That's the type of thing I want to look for, especially as I'm looking at accounts that I'm saving money in, right? So investment or savings accounts. I also want to look at my debts and my liabilities. Who do I owe money to? When are those bills due? Are they overdue? Do I have a credit card statement? What's the status of that? And I just like to look at those things. If I've got a credit card statement, is the balance going up every month? So am I not paying it off? That's the type of thing that I would want to flag and make sure I put a plan into place for how to pay that off. Same thing, some debts are going to be okay, right? I mean, I'm sure there are a few bills sitting in my inbox right now of things I need to pay. That's perfectly fine. That's normal. But you want to look at that and say, okay, are my debts increasing? Am I taking on more debt over time? Am I taking on too much debt, more than I can handle? So I like to look at those things as well. I want to see, before we do the example, yeah. Okay, no, I'm going to go back for a second. Actually, yeah, we'll go back. We'll do the cash flow tracker first. So let me pull up the cash flow tracker real fast. Bear with me. Can we switch the screen again? This is a fun game. Okay, now this is my cash flow template. This actually is not my exact cash flow. Mine had a lot of transactions and felt kind of overwhelming. So I basically summarized it into a sample cash flow, but this is the exact template I use. So I don't use a different template. And this template, by the way, is actually available if you grab my Biz Money bundle, which you can get by going to megkwheeler.com/bundle. This is one of the tools you get in it. And when you get this, I actually offer you 2 types of trackers, monthly and daily. I will tell you the monthly is easier to use. The downside is the monthly does not account for the fact that your cash comes in and leaves at different points throughout the month. So you could look on a monthly basis as if your cash flow is fine, but actually on a daily basis, you could end up negative if all of your cash goes out at the beginning of the month and the cash coming in doesn't come in until the end of the month. So that's why I recommend people do this daily tracker. Now let me just, let's see, how can I hide some things here just because I want y'all to be able to see as much as possible. Get rid of the formula bar. Okay, so this is my daily cash flow tracker. And essentially what I do here, it's very, very simple. You've got your beginning balance, and then I list all of my transactions. Now, at the beginning of every month, or when I'm setting up the 3 months, what I do is I actually do, and here I'm going to duplicate and show you. So this would be, we'd call this January. If I were setting up February, what I do is I actually I will put in placeholders. So for example, membership sales. Let me just actually take all these off so I can show y'all what I mean. All these numbers too. Okay. So basically what I do is I come in here and I'll say, okay, I'm going to sell, $2,000 in memberships next month. So I'll put these placeholders in here, and I can do the same thing for my course. And notice I'm doing it for the 15th and the 30th. 2,500, 500. Okay. So these are my placeholders so that I know generally when the cash is going to come in. And then as I actually get the cash in, and I come in here, I have my bookkeeper, or you can do this, or you can have a VA do this, come in here and actually now break this out into the actual transaction. So once they happen, I'm going to say, oh, okay, instead of getting $1,000 on the 15th, we actually got 500 on the 3rd, we got another 500 on the 7th, and then we got another 500. Oh, that's actually more than 1,000. We got another 500 on the 12th. And then I would take out my placeholder. Make sense? So, but going back to this month where I've actually put in my actual transactions, which is a little confusing since January hasn't happened yet, but that's okay. We're going to go with it. I've gone ahead and I've added in here all of my expense transactions and all of my income. And I got the date here, right? So I can sort by the date so you can see where it all comes in. Here's my membership, my course sales, my membership, my tax prep. And then I also have paying myself in here. I have savings for my taxes. I take out 35% of every of my profits. I take 35% of my profits and put them into a tax savings account. And by the way, I do that at my money meeting. So at the end of my money meeting, I literally look at my profits month to date and I say, okay, what were my profits this month? What's 35% of that? And I transfer it to my tax account. So I've got all of this in here so that I can track my cash flow. Now, things that I look for when I'm looking for my cash flow, number one, I look to see where's my lowest balance of the month. So like here on the 15th, things get pretty low. Sometimes I'll even highlight this in yellow just so I'm aware of it. I even will highlight something like this. This also gets pretty low. It's not the lowest, but it gets low. And this is why I keep a 3-month tracker. So I'd have January, February, and I'd have March, because I also want to see what's the lowest over the next 3 months. Because sometimes the first month might look okay, but a couple months out, oh, all of a sudden you're getting pretty low. So it's important to know that. And if my balance, like this low balance actually makes me a little nervous. So what I might do in that situation is I might say, I'm going to pay myself on the 16th. I know I'm getting this money on the 15th and I'm going to wait till the 16th to pay myself. Or can I move some other things around? Can I go to my my expense or my bill company and say, hey, can I change my payment deadline to later in the month or whatever it may be? So that's the first thing I like to see. The other thing that this tells me is what I have to play with. If something happened and I needed to take cash out of my account, I know that as long as I don't take more than $569, I'm okay because that's my lowest balance, right? Because sometimes what happens is we'll log into our account and we'll say, oh, look, I've got $4,200. I can go spend that money. Well, no, you really can't because you've got all these other expenses that have to come out. So that's why identifying your lowest balance is really important. Okay, I'm going to pause here for just a quick second. Let me know if anyone has any questions. So do you recommend a tax savings account? Oh yeah, this is a great question. Hold on, I got to come back to my screen here. So it depends. It depends on your bank. So a couple of things that I recommend. I use Aslo for my bank. I actually recommend Novo, believe it or not. I just haven't switched myself over yet. But I highly recommend Novo. But one thing that Aslo can do, and I believe Novo can as well, although now I'm second guessing myself, is they can set up what they call envelopes. Now it's not a separate account, so it doesn't move the money out of your account. But what it does is it basically creates a separate envelope. So essentially it'll move that money into your envelope and keeps it there for you. So I actually use the envelope in my Aslo account to save for my tax savings. The benefit of doing it this way is, number one, I don't have to set up a separate account. It's just already there, right? But it also does segment it. So that money isn't going to show up as available in my checking account balance. It's not going to show that I have it to spend because it's segregated it into my envelope. But if something happened, if my cash flow got really low or I get in a pinch or whatever, I can immediately transfer that money out of my tax savings envelope back into my checking account, if you will, and that money is available. Now, that's a good thing and a bad thing. It's good in the sense that if you get into trouble, you've got the money there right away. The downside is it makes it a lot easier to take that money out of your tax savings, right? So I think it comes down to, are you diligent enough to put it there? If you want to save it in a completely separate account, I would recommend Capital. And actually, it's spelled with a Q. So hold on. So let me drop this in the comments. So Capital is a fairly new tool, Qapital, which basically does set up a separate account for you. And so you can link it with your bank account and it can transfer money in a variety of ways. It can transfer it every week, every month. It can take a percentage of sales that come in. Like, it's actually pretty cool. You can do what they call creating rules that basically say, when X happens, do Y. So I actually also have a Capital account for my business savings account. Now for that one, I have it automatically transfer a dollar amount every single week. So no matter what money I make, it's going to transfer the same dollar amount every single week into that account. Now I've done that one that way because I want that money to be separate. I don't want to take that money. I don't want to have that money there sort of teasing me, right? Like, oh, I could just spend it and spend it on this or whatever. So I like having that money completely separate. Okay, and so then you'd ask, would you recommend bypassing PayPal Business then if you pay for Aslo? Okay, so a couple of questions I have. So the first thing is, so Aslo is free for the basic plan. They did, and this is actually brand new. They used to be free completely. They have just started with tiers. And the reason they've just started with tiers is because they've started to roll out some new features. So, and actually, let me pull this up. I can pull this up on my phone while I'm sitting here. But what they have is, so with the basic plan, you get one envelope for free. The free plan is the basic plan is free, but they have increased plans that you do pay for. And I know if you want more than one envelope, you've got to upgrade your plan. And I'm not seeing it on their main page right now, so I apologize. But azlo.com is where you can learn all about their plans. So the first thing I would say is, do you need to be paying for ASLO? Like, that's my first question, because you said if you pay for ASLO. I don't pay for ASLO. I have the completely free account option, and it works for me. So that's my first question. Pricing, here we go. So yes, with the starter ASLO, you get unlimited transactions, no minimum balance, no overdraft fees, 55,000 ATM locations, no ATM fees. You can make payments to vendors and contractors for free, unlimited invoicing, and you get the one ASLO envelope for budgeting. If you go up to the $10 a month plan, you get some additional, you can schedule and do recurring invoices. You get unlimited ASLO envelopes, so on and so on. So I'm not entirely sure I understand your question of, would you recommend bypassing PayPal Business if you pay for ASLO? If you're asking in terms of invoicing, then I would say yes, because PayPal Business is just another way to invoice. So I can actually invoice people. And actually, before I say this one piece, no matter what tool you use for invoicing, you're going to pay transaction fees. If you are using, and this is not what you asked me, I know, so I'm not, I'm not saying this to you specifically, but if you are using PayPal Friends and Family or Venmo or Zelle, those are not supposed to be used for business. So if you're using those, you're not paying any fees, which is, great, but you can actually lose your accounts because technically those are not allowed for business. Any account that's allowed to be used for business transactions is going to charge you transaction fees. So, yes, I wouldn't go out of my way to have PayPal Business if I already have ASLO. Now, I can invoice people via ASLO. I can invoice people via Wave Apps, which is my accounting software. And that's actually probably it. Yeah, that's probably it. And so and I don't do a lot of invoicing, to be completely honest, but what I would do is make it easy on yourself. I would either use the invoicing tool in your accounting software, if you have accounting software, or I would use the invoicing tool in your bank account, in ASLO, if you use ASLO, because you've already got that feature built in. So yeah, okay, perfect. Yes, invoicing, awesome. Yeah, they all have transaction fees. Actually, it's interesting that ASLO says free. Now you have me curious. Yeah, no, ASLO has free, but it's well, that's super confusing. You're still going to pay transaction fees though, aren't you? Oh, now I don't even know. I use it so infrequently. But basically, long story short is you're always going to pay transaction fees. So I would just simplify your process and use the invoicing in ASLO or use it in your accounting system if they have one as well. Yeah, I'm not seeing it on their website, but okay, perfect. So let me pop off the cash flow for a second because I want to go back to the slides. So bear with me one second. All right, perfect. I know this is kind of clunky today. I apologize for this, but since I am sick, I am not in my office, so I don't have all of my tech stuff. So we're a little clunky today. Okay. So once I've looked at my income statement and I've looked at my cash flow, these are some of the overall questions I want to be asking myself. First, where did I hit my budgeted goals? And in those areas, not just saying, yay, go me, although you should definitely do that, but also looking at why did I hit those budgeted goals? I'll give you a great example. I exceeded my goal in December for tax prep. And one of the things I did when I did my January money meeting, or my first meeting in January, I should say, is I thought about that and I said, well, why did I exceed my budgeted goal for that? And one of the reasons I realized was because I really focused on it. For 2 weeks, it's all I talked about straight. So it's good to look at those areas and walk yourself through what you did that worked so that you can replicate it. And by the way, I take notes on all this stuff. I have a money meetings observations tracker, which is just a very, very basic Excel spreadsheet. You can make your own. You can use a notebook, whatever you want. But I literally will just write down my observations so that I can remember what worked and I can use it in the future. Now, I also like to think about, well, where did I overspend and where did I under earn? And again, this isn't to shame myself or judge myself. It's to say, what do I need to be aware of? Facebook ads is a great example. I'm not running a ton right now, but early in 2020, when I was looking at my money, for a few months in a row, I kept overspending on my Facebook ads. And I just wasn't realizing that I was spending as much as I actually was. And so that was a good thing for me to pay attention to. And so I knew that I had to prioritize really keeping an eye on it so that I didn't keep going over my budget. I also like to look at what are my goals for the next month, because our goals are not always the same month to month, right? Especially in my business, every month I'll focus on a different thing. All of my services and products are always available. So when I'm not ever in launch mode, but I do pick a product or a service every single month to make my focus for that month. So that's something I'm going to look at as well. Well, what is my focus for this month? And what's my goal? And what do I need to do to get there? I also like to address what areas I'm concerned about. And I know this can be uncomfortable, but it's important. One of the areas I was concerned about when I sat down for my mid-December money meeting, and I was kind of looking ahead to January, is I felt like I had all these revenue goals every month. I had a membership goal and a course goal and tax prep and this and that. And it felt all over the place. And I was getting really overwhelmed at how I was going to hit all those goals and focus on all of those things. So what I actually did was I sat back and said, hold on, I don't really care if I get this much money from my membership or this much from my course or this much from tax prep. I just care that I get this much overall. And so what I actually did was simplify my revenue goals. And I said, this month I'm going to focus on my course, this month my membership, this month my tax prep. And if you're on my email list and in my world, you'll start to see that every month it's going to be more focused on one thing. December was tax prep. This month it's going to be the course. And so it's noticing things like that. Where am I concerned and what can I do differently moving forward? And then the last thing I ask is, what adjustments can I make now? So this is the question I'm always asking myself, because I always want to make sure that I'm taking advantage. I mean, this is the biggest reason why we look at our numbers and why we do these money meetings, is so that we don't miss stuff, so that we don't end up months from now saying, I've run out of money and I'm burnt out and I'm not making any money and I don't know what happened. That's why we look at this stuff repeatedly, so that we can make those adjustments before things get too dire. Okay, yeah, you were saying that's what I was confused about. If there were transaction fees in Azlo or not, I would just dump PayPal and migrate there for managing invoices and transactions. Excuse me, I can't talk. Yeah, I'm having trouble just really fast on my phone finding the exact fees, but I can tell you this, there's going to be transaction fees in every business invoicing application. I have yet to find a single tool for business that does not charge transaction fees, and I don't blame them because they're running a business too, right? So, and usually someone will respond to me and say, well, Zelle or well, Venmo. And again, I want to repeat, those are not supposed to be used for business. You can lose your account. It's against their terms of service. So yeah, I would just look at Azlo or your accounting system is the other one that tends to have invoicing tools as well. So like Wave Apps for me has invoicing tools. Okay, so that's where we're at there. We're almost done. We're almost to the end. So one of the biggest things, kind of finishing the thought I was just starting about why it's so important to dive into your money on a regular basis, is because it gives you this ability to pivot and adjust if you need to. So when I'm wrapping up my money meeting, I always like to ask myself these 5 questions. Number 1, where can I increase my revenues? This is really where I'm going to look at and say, which revenue streams are the most lucrative for me right now? And which revenue streams are the most profitable for me? So if we go back to, and I'm not going to do it because I'll have to share my screen again, but if we went back to my profit and loss statement, y'all saw that I brought in a lot of money last month for tax prep, which is great, right? But, so that was my most lucrative, but the tax prep takes a lot of my time and my labor. So as I'm thinking about this, my first instinct might be, well, just sell more tax prep. But so much goes into that. So in fact, one of the more profitable revenue streams for me is actually my course. It's the one that I'm the most hands-off on. And so dollar for dollar, I have a higher ROI, return on investment, when I sell my course than when I sell my tax prep services. It doesn't mean I should abandon my tax prep services. It just means that I have different offerings to bring people into my world in different ways. And so thinking about where can you increase those revenues, but in a way that doesn't just bring in more sales, but also brings in more profits for your business. On the flip side, where can you decrease your expenses? I use my money meetings as an opportunity to review my expenses and ask myself those hard questions. Do I really need this? Is this really worth spending X on? I mean, your question about transaction fees is great. Like, is this the best option for me? So asking yourself those questions is good. Profits. What should I focus on to maximize my profits? This is what I was just talking about with my course versus my tax prep. Too often I hear people talk about revenues. Oh, I made 6 figures in revenues. I had a $50,000 month, but those are revenues, not profits. Profits being the thing after you subtract expenses from revenues. So when I'm looking at my numbers, I'm really focused on those revenues. Now, I don't have enough expenses tied to each revenue stream to like perfectly track my profit for each revenue stream. So what I do, and I don't do this every time I do a money meeting, admittedly, because this can take a little bit of time, but what I will do, every couple of months or so, is I will sit down and I will allocate my time and allocate my expenses to each of my revenue streams to get a sense for the profitability of each. And then once I figure out which of my revenue streams are more profitable, I'm going to focus more of my time on those because I'm going to get more bang for my buck out of those. The fourth question I ask myself is about cash flow. Even if I feel relatively okay with my cash flow, I'm going to ask, is there anything I can do to shift or anything I can shift to make it more stable? So again, can I change the due dates of things? Can I adjust when I pay myself? Can I reduce my expenses? Can I change up my payment terms for when people pay me so that I'm getting more cash up front? Looking at that, and again, you're looking at this on a 3-month rolling period to see what makes the most sense for you. And then lastly, if you have debt, what can you do to reduce it during the year? What is your plan for getting rid of your debt? Even if it's just paying a little bit towards it every month more than you did. Or even if step number 1 is actually to stop increasing it, right? What is your plan? Write it down, make sure you have a plan, and then make sure you revisit that plan every single time you have a money meeting. Okay, so last slide, we are almost done. I know we're a little bit over. I usually like to make these 30 minutes, but my money meetings typically are about an hour. So, this is the time I allot for them. Okay, so last thing, wrapping up your money meeting. I like to pick 1 to 3 focus areas that I'm going to focus on over the next couple of weeks before my next money meeting. And what I mean by focus areas, it could be cash flow. Am I going to work on adjusting my due dates so that my cash flow is better? It could be increasing my revenues. Am I going to do another promo so that I can get more money in to meet my goal for the month? It could be reducing my expenses. Am I going to go through my credit card statement, and make a list of all the expenses or am I going to call them up and see if I can get better rates, whatever it may be. So I like to pick 1 to 3 kind of focus areas and action items that I can take. I write them down. I put them in my to-do tracker. And then I check in on their status when I do my next money meeting. So I like them to be really actionable. I like them to be things that I can do between today and my next money meeting. I don't want them to be super long, so that I can really make some progress in mastering the money stuff. I also like to confirm the date and time of my next money meeting. So I told you at the beginning that I put these as recurring calendar events, and I do, and I rarely move them. But nonetheless, sometimes something comes up that I can't adjust. And so before I wrap up my money meeting, I want to make sure that the next money meeting I have scheduled works and I don't need to make any adjustments at this time. Because the worst thing, the thing you don't want to have happen is you don't want it to be the day before and go, shoot, I forgot I had this and that. And then all of a sudden it's really hard to move that around and you end up deprioritizing it. I also, at the end of my money meetings, write down my observations. I told you I keep a tracker for this of what worked well versus what didn't. And I mean, what worked well in terms of my money, not the money meeting itself. So, what worked well with my revenues, what worked well with my expenses, and then similarly, what didn't, and what can I improve on in the future. And then last but not least, I reward myself. So this could be, going for a walk. It could be having a glass of wine. It could be watching an episode of whatever show I'm binging at the time. But I like to give myself a reward so that I have something to look forward to as I'm going through this meeting. And I know that at the end of it, I'm going to be able to take a break. Because the other thing I will say is, even for someone like me who loves numbers, these meetings can be very exhausting. You're looking at a lot of numbers, you're analyzing data, and it can kind of suck a little bit of energy out of you. So I like to make sure that I schedule time afterwards to just really decompress, reward myself, and give myself the space to step back. So, okay, let's go back to our beginning slide. Nope, just kidding. There we go. So that is all I've got for y'all. I'm going to wrap it up here, but I'll give it just a few more seconds. If anyone else has questions, feel free to drop them in the comments. Otherwise, if you are watching on the replay, absolutely please leave your questions. I will get them answered. I do, of course, do a weekly Q&A in my free Facebook group, The Badass Moneymakers, which you can join by going to megkwheeler.com/group. Oh, great question here. Are you able to write off transaction fees? Yes, you are. So your transaction fees are a business expense. But here's the one trick with that. So depending on how your accounting system is set up. So my accounting system is set up to sync with my bank account. So basically, I'm going to use really random numbers, but let's just say it has a $50 transaction fee. So when my accounting system records that transaction, it's actually going to record it as $950 in revenue. It's going to do the net, right? Because $950 is what came into my bank account. What you're supposed to do when you do your taxes is you're supposed to actually report $1,000 of income and then $50 of the transaction fees expense. So the reason I'm saying all of this is because depending on how your accounting system is set up and depending on how your invoicing is set up, your accounting system may either show the net, the $950, or it might show the $1,000 of revenues and then the $50 of transaction fees. So either way, you get the benefit of deducting the transaction fees, but just be careful that you're not double deducting. So if your accounting system shows the net of $950, you don't then want to take another $50 deduction for those transaction fees. So that's just my only warning, is to figure out how your accounting system reflects that transaction, and then just make sure you're not double deducting that expense. But that is a great question. So, okay, so yep, we've got our Q&A. Let me go ahead and drop, so the Facebook group, if you all are not already in it, you can join by going to megkwheeler.com/group. And what else did I want to tell y'all? The other super cool thing I wanted to tell y'all was we have now opened up our Biz Money Library, which is a lot of fun. It's completely for free. It's basically one space to get access to all of our Biz Money resources. And we're adding resources every day. So there's only a handful in there right now. We've got so many more that we're going to be putting in there. And they're all super organized too. So this isn't going to be one crazy place where you have to like sort through to find what's valuable. This is a great resource if you need something on taxes, if you need something on accounting, if you need something on banking, whatever it is, you can go to this one spot. So you can grab your access to it by going to megkwheeler.com/free. It is completely for free, but you do need a login to get into it. That's why you've got to go to this site. And otherwise, I will be back here tomorrow, Thursday, January 7th let's see what time we're back here tomorrow, at 12:30 p.m. Eastern for our weekly Q&A. And again, that's in the group only, and you can get there by going to megkwheeler.com/group. So I hope this was helpful for everyone. I hope you're having a great week, and I will see you all next week. Bye.